Very good afternoon to you, Julia. Thank you for joining us. Please welcome our guest speaker, Julia Hoggett, Chief Executive Officer of the London Stock Exchange.
Thank you very much.
Just giving you a very brief background to this wonderful, amazing leader to the London Stock Exchange, from fixed income generation to regulatory market oversight to leading one of the world's largest global stock exchanges. Julia is a veteran within the capital market ecosystem with a record of transformative leadership and value creation across multiple jurisdictions in which the London Stock Exchange operates. Julia has spent her entire career in capital markets and knows the key role that they play in providing vital capital to companies and institutions and delivering returns for individuals and institutional investors. Julia was included in the Financial News 100 Most Influential Women in Europe's Financial Markets across the years 2010, 11, 12, 21, 22, and 23, and awarded Industry Leader of the Year 2023 by City AM. Julia has over 25 years of experience in the industry, and I'm very confident that Julia will shed valuable insights and perspectives to our Fireside chat today. So thank you, Julia, for joining us. My first question is...
Thank you very much for having me.
My first question is, the London Stock Exchange is one of the world's oldest stock exchanges with its history tracing back more than 300 years. Since you've taken the reins in April 2021, what are the key capital market reforms that you've been involved in to ensure that the LSE remains dominant over the next 300 years? And can you also shed some color on the Capital Markets Industry Task Force as well?
Absolutely. Well, firstly, can I say thank you so much for inviting me to join you today. I'm very sorry that I can't be with you in person. I'm actually not very far away in Riyadh, attending both the World Economic Forum and the Islamic Development Bank's 50th anniversary annual general meeting, and launching the Green Sukuk standard, which is why I've had to be in Riyadh. But I am utterly delighted to be with you today. In terms of the question, let me start by saying I have a fundamental view about what the role of stock exchanges are. I always say that we are conveners. Our job is to bring together those who have capital with those who need capital in service of an objective. And therefore, I also think it's critical that stock exchanges play an advocacy role. We are, by definition, the place where the ecosystem comes together, and therefore we have a unique role to play in advocating for the evolution of that ecosystem. I always say, and you made reference to the age of the stock exchange, I always say I run a 300-year-old fintech. In many regards, the matching activity that we run and undertake is the core purpose. But we have a much bigger role in not necessarily setting standards. A lot of the standards in the UK are actually set by regulators, but in articulating the things that need to evolve in the ecosystem to make sure that they work as well as they can for the next 300 years as they have for the last 300 years. In that context, we came together over 2 years ago now to form a thing in the UK called the Capital Markets Industry Task Force. And that brings together the private markets ecosystem and the public markets ecosystem, uniquely seeking to join them up and look at all the different coherent parts of the ecosystem that need to continue to evolve to maximize the impact of the markets. So we have an agenda that we describe as 5 fingers in a glove. That is prioritizing the quality of our primary and secondary capital raising rules, making sure that that works for investors and for issuers. Ensuring that we continue to have high quality sell-side research so that the next generation of cutting edge technologies that our companies are leading can be fully and properly understood and valued by the market. Making sure we're constantly focused on the availability of risk capital. So making sure that the second largest pool of institutional capital, which is what we have the privilege of having in the UK, can be directed towards risk capital and towards the next generation of growth in listed companies and in those companies that come next. Making sure that our corporate governance and remuneration structures work for companies so that they focus on genuine returns for stakeholders and less about what checkboxes they need to tick. But also making sure, and this is unusual for a public market ecosystem, that we're focused on the evolution and the growth of the private markets ecosystem. We have a very simple phrase: you don't create consequential private companies without creating you don't create consequential public companies without creating consequential private companies first. And the glove is the ecosystem and the culture, and how we talk about it, and how we talk about celebrating both the remarkable entrepreneurship that we see in finance through our markets, but also the core role of public markets. Public markets are a public good that serves all of society. And very often in a lot of societies, I think they can be talked about as things that banks do. And we talk in bid cover ratios and basis points, not about the actual role that the financing plays in generating jobs, generating growth, and generating the next generation of breakthrough technologies, including those technologies that will be critical for the green transition. And so it's also about advocating and changing the conversation about what role capital markets play. So there is a huge reform agenda going on in the UK right now to make sure that we continue to lead the way for the next 300 years as we have for the last 300 years. And we have, in fact, the biggest reform agenda underway for 40 years in the UK right now.
Thank you. So if we look at the LSE's IPO proceeds by sector, majority is driven by the technology sector. And globally, the world's being driven by tech-based fast growth companies. How is the LSE laying the groundwork to further attract tech-based companies to IPO in the market?
I think there's two different ways we're doing it. One is, I might say, old school, and one is very new school. The old school is making sure that we look at our fundamental rules for our public market and make sure that they work for high growth and IP-based companies. Quite a lot of the history of our market has been looking at fixed asset companies that throw off cash, and therefore past performance is to some degree a predictor of future performance. But actually, when you're looking at high growth IP companies that can have very, very fast growing evolution into a new market that sometimes is the creation of that market kind of in moments, then that needs to have a different way of thinking about the evolution of the company. And making sure that our fundamental listing rules meet those requirements is something that the FCA, the Financial Conduct Authority in the UK, is focused on really reworking the structure of our listing rules at the moment. And that will enormously benefit the existing trend that we've already seen with high growth tech companies. The new world solution is that we're actually building in the UK the world's first crossover market between private and public. The opportunity to enable in a regulated space, private companies to have an opportunity to have a public price or transparent price formation process for their secondary shares on an intermittent basis. And that is the idea of essentially understanding the journey that particularly PE and venture-led companies face in terms of their transition from being private to public, and recognizing that private markets do not generate the liquidity on their own that these companies require, but they are critical for our economies. And therefore, we need to connect the dots between the private and public markets. And so that innovation is happening in the UK at the moment, should be up and running by the end of 24 and actually active in 2025. So as I say, there is a lot going on in the UK capital markets at the moment.
Great, thank you. So staying on the topic of tech-based technologies, in December 22, the news came in of Microsoft's 4% stake acquisition into LSEG worth $2 billion, indicating a blurring business lines or boundaries between big tech companies and exchanges. As CEO of the exchange, how do you foresee this acquisition will impact the business model of the exchange within the foreseeable future?
It's an interesting point you make about blurring between tech and exchanges. I feel, as I said, I think at the beginning, that I run a fintech company already. And therefore, fundamentally, our biggest job is making sure that our technology functions. And therefore, there is an enormous overlap already between the psyches and the focuses of both LSEG and Microsoft. But the London Stock Exchange Group as a group is now a globally diversified group with, yes, exchanges and a range of capital market services, post-trade services, and one of the world's leading data and analytics service providers. And therefore, we already have that capability as a group in terms of how we've reimagined ourselves. And making sure that we can work with Microsoft to facilitate the availability through their workflows of the very capabilities that we have as a group is one of those opportunities to really synchronize and make the way markets function much more straightforward. From a pure play capital markets point of view, it also gives us the opportunity to explore working together more on the evolution and future shape of our capital markets and how they function. I think it is fair to say that we all recognize that we operate off relatively siloed and quite historic stacks in terms of the technology. As someone who has been an investment banker, particularly in the debt markets, I'm very well aware that large parts of that market are still tied together with spreadsheets and string. And there is no doubt that there are opportunities for us to optimize processes and procedures, move away from Excel spreadsheets and PDFs going over emails, making sure we're using the next generation of technology. And that gives us the opportunity as well. So it is a collaboration and a meeting of minds of two companies who have very much the same vision for where the markets can evolve from here.
Thank you. So moving slightly away from the London Stock Exchange and more focused on the Arab region. So the London Stock Exchange is a key international hub for green finance, and through the sustainable bonds market provides issuers with a range of opportunities to issue green, sustainable, sustainability-linked, as well as transition bonds. Based on your own experience at the London Stock Exchange, how do you foresee organizations within the Arab region raise capital to help lead the transition to a sustainable and low-carbon economy?
Well, I think the simple answer I can give you is I can see they're already doing it. In that we see a huge growth, not only in bond issuance that are listed on the London Stock Exchange from this region, but also in sustainable bond issuance. We had the privilege and honour of supporting the launch of the Kingdom of Saudi Arabia's green framework not many months ago. We've had the PIF issue their green bonds. We've had Masdar issue green bonds. We've had the Abu Dhabi Islamic Bank issue as well. And within the supranational space as well, we've seen the Emirate of Sharjah. And as I said, the Kingdom of Saudi Arabia did its green framework launch on our Spark Live platform. So we have seen and continue to see a huge amount of green bond issuance. As I mentioned earlier, I'm here because we're launching the framework with the ICMA, the International Capital Markets Association, Islamic Development Bank, and ourselves for Green Sukuk. To me, the Sukuk market is one that is entirely consistent with focus on sustainability, and therefore making sure that we can grow that natural fit between the Sukuk market and the sustainable bond market that we've already seen, not only from the framework perspective and the issuance perspective, but actually from an investor demand point of view as well. That is something we're intensely focused on. So we're seeing a continued growth. And every time I come back to this region, I see more of the direct investment that is being put into the transition. And that is a critical part of our role. We view our role as a stock exchange in having both the sustainable bond market, the green economy mark, which can support and identify those equity issuers and funds who are directing capital into the green economy and into the transition, and also in the voluntary carbon space as well. But we see that strength already continuing, and I suspect it will become an incredibly fast, even faster growing part of the bond issuance from this region going forward.
Thank you. Maintaining the lens on the Arab region, what's your articulation on the future of voluntary carbon markets within the Arab region, and how do you foresee it impacting the broader decarbonization efforts across the region, particularly given that most of the countries are oil-producing economies?
It's an interesting question because I think in the context of climate change and the just transition to net zero, the simple reality is that in many regards, we're all facing exactly the same challenges, and should see it that way and think about the maximum opportunities we have to collaborate. So one of the ways we've been thinking about that at the London Stock Exchange is fundamentally focused on the role of the voluntary carbon markets and their strengths and what purpose they can play. Now, voluntary carbon credits fundamentally are an opportunity to invest in projects that generate those credits that offset the amount of carbon in the atmosphere and reduce or remove carbon from the atmosphere. The global north, particularly the European-based issuers who have made science-based commitments, will increasingly become a buyer of those credits as they need to get to net zero. And there will also be both sovereigns and companies in this region who will also be natural buyers. I know there has been a great deal of focus on the trading of carbon credits, but the simple reality is that carbon credits, in large measure, to achieve their goal of reducing the amount of carbon in the atmosphere, are intended to be created and then cancelled in order to be held for life by the corporate or the sovereign against these usually scope 3 emissions that they couldn't otherwise abate. And as a consequence of that, we have focused as a stock exchange not on the trading of the credits, but on the financing market that generates the financing into the projects to create the credits themselves. Now that makes it incredibly synchronous with some of the activities that have been happening in this region in terms of creating carbon credit exchanges. We are not at the moment trading those credits. We're simply working on how we can direct as much capital as possible into the region, into the credits, and therefore also have the opportunity that those credits can be traded in the region. And there are natural buyers in this region, but there is also a huge opportunity for this region to be a supplier of credits as well. One benefit of having a certain amount of natural resource that is also based in sunlight, not just in carbon. And therefore, I think we do need to think through how we continue to evolve the market through the lens, not just of the trading of the credits, but fundamentally through the lens of the full life cycle of the credits, in the creation of those, well, the investment into the creation of those credits, the creation of those credits, the oversight of those credits for their life, and the trading of them. And one of the things where I think we are struggling right now to truly see the potential scaling value of the voluntary carbon markets is in that verification piece. The verification capability at the moment does not meet the scale of the demand that has the potential. And so one of the things we have been talking to both the British government and elsewhere about is how we think about accelerating that verification capability's growth, because I do think the private markets have the potential to finance an awful lot of this activity if they have the confidence that their money is going into high quality projects that genuinely create carbon credits and genuinely create other sustainable development goals as a byproduct of those credits. And therefore, I think there is even more growth from here that we can see.
Thank you. This brings me to the last question of our Fireside chat today, which is, what are the opportunities and challenges you see for the Arab region in terms of the transition to the low-carbon economy in light of the outcomes of the COP28 held in Dubai and the vital role that exchanges play in mobilizing capital and supporting the net zero journey?
Well, I think the first thing is that, I mean, I've had the privilege of being at a number of COPs now, and the one in Dubai illustrated the importance of the role of collaboration. So I was on a panel with several other exchanges hosted by the UNSSE, and we have been very active in the UN Sustainable Stock Exchange Initiative because, yes, multilateral and country-to-country negotiations are essential in the just transition to net zero, but there is so much more that we can do as exchanges in setting standards, in making sure that those standards are coherent and applicable and usable by different markets, and raising the bar together. And I think the UNSSE does a superb role in that, and we are seeking to be active participants in it. And I think that is where we need to focus, which is, yes, we can use the official COP processes, and there is no doubt that the annual impetus for us to continue to demonstrate that we are making progress each year is absolutely moving the dial in terms of the initiatives, the amount of financing that's going into various markets. But there is much more that we can do bilaterally and multilaterally outside of that scope to deliver the change that we need. And I have every confidence that actually the way we all work together as exchanges can continue to grow. And this is a vital agenda that matters for all of us. And we absolutely want to collaborate with exchanges across the region in setting those standards, making them usable and applicable, and making sure that we can see the capital flow to the very place it needs to, which is the just transition to net zero.
Thank you, Julia, and thank you for joining us today. I'd like to ask the audience to give a very loud applause to our guest speaker, Julia Hoggett. Thank you for joining us.
Thank you so much indeed. Thank you.